Welcome back to the Takeoff. I'm really excited about today's episode. This is a really good friend of mine who's a mortgage and credit score expert. He also teaches financial literacy like myself on various platforms such as Instagram. His reels are fire and he's just all round a great dude. So I thought you'd be the perfect person to help you understand how you can get yourself onto the property ladder if that is something that you are interested in doing, and also helping you to set realistic goals. So how you doing, bro? I see that you've been pumping iron in the gym
Bro,
recently.
I'm good. Come on, man, bro. It's either that or go to sleep, but you can't sleep all day, so you gotta do something. But yeah, bro, nah, love for having me, man. Love for having me. I've been waiting for you to do this and honored to be a guest. So yeah, I'm happy
No
to
worries,
be here, bro.
no worries, man. No worries.
Yeah.
Okay, so obviously I did a little bit of an intro for you, but if you want to elaborate a bit more of, who you are, what you do day to day, and also on your side hustle too.
Yeah, of course. So yeah, my name's Clarence. CK Talks Money. As Atto mentioned, I actually do run a page, as Atto said, based around financial literacy, mainly focusing on mortgages and the credit scoring. I do dabble in other areas here and there, but those are my specialist areas. I was actually a mortgage advisor for 4 years, and I've worked in the financial sector for just about 9.5 years now. So at the moment, I work in risk and compliance. So I work in, you know what, I'm not even going to bore them with the details of what risk and compliance is. But I work in risk and compliance. Those who know what it is. And yeah, that's me.
All right, bro, man. Thanks for that explanation. That's a great explanation. It's funny that you said that you don't want to bore them with the details. I know what you're saying. Like, sometimes it's like, you don't want to, you can't share your job with people because they feel like it's just going to be like...
Literally, if you want to know, go on LinkedIn. You'll find me.
If you go on LinkedIn, yeah, you're going to find out what he does. Oh, man. But no, that was a great summary. So, obviously I always ask everybody this question. And I like to think that my guests like to know this about all of us. So what is your worst financial mistake?
Wow, my worst financial mistake. You know what? I don't think I have a particular purchase, but what I would say was I went through a spell of buying trainers aggressively.
Really?
Aggressively is the best way to explain it. Like, literally every week, I could literally be having another box of trainers in my room. And that probably explains why I have so many trainers now. But when I look back, it's kind of just like, wow, like some of them I've worn like once in the last 2-3 years. So it was just such a mad waste. Like, of course, maybe I might need them eventually, but there are ones that I've bought that now. I remember when I was sending some clothes to charity and stuff like that, and my mum was sending some stuff to Nigeria. About 5 to 8 boxes of CREPS have just gone tonight. And these are some of them are trainers I have not worn. Like, they were fresh. Like, if not for the fact that there's a refund policy, I would have literally gone back to the shop and said, "Oh God, bring my money back because this isn't fair," So it's just it was more the spending habit of just buying what I didn't actually need. Is what I would say.
Man. Yeah, no, you know what? I can definitely relate, man. I've got Pradas that I've wore twice. And I was like to myself, I spent almost £200 for that. I've not even made full use of it. You know what I'm saying?
Honestly.
Oh man. I don't know. I think there's just something about us guys that we just like our trainers, Sometimes it's not even about wearing it. Sometimes it's just about looking at it and be like, "Oh, right, yeah, I got those. Just say to somebody,
just
yeah, I got them.
Yeah,
you know what I'm saying? Yeah.
Exactly. It's just unnecessary. But I guess with age, when you adapt and you grow, you kind of just learn that all of that stuff is so not necessary at all.
Exactly, bro. Bro. Yeah, all the materialistic stuff, you just get to a certain point, you're like, what? It's not that important, really. It's not as important as you used to think. So give us a bit of an insight what the day of the life is for CK.
Day in the life of CK. Wow, I feel like I'm on MTV. They're following me around with the camera. Mad. Alright, cool. So day in the life of CK on most days. Cool. Wake up. I've taken a choice recently to have a routine when I wake up. So I'm tired
Okay.
of just waking up and just rolling out of the bed and just deciding what I'm gonna
Mm-hmm.
do. So these days it's wake up, pray, thank God for another day. Um, Provided that I wake up on time, go to gym.
Mm-hmm.
Like Ato said, if you do follow me, you'll see me doing up gym in my stories. You'll see a bit of that as well. And then it's literally go to gym, come back and start work. So I start work from about 9:30 ish. And then it's just once again me not wanting to bore you with my day. Then it's just me
Mm-hmm.
sort of like transitioning during the day, going from task to task,
Mm-hmm.
going through from meeting to meeting as we do. But along as the day goes,
Mm-hmm.
there are little snippets where I might be thinking about, right, what content could I make? So I actually have like a
Mm-hmm.
log on my phone on the notes section of literally content that I haven't made yet that I want to make. So even during the day,
Okay. Okay.
I might be adding to that list to say, oh wow, like, I haven't made anything about this, or this new thing has just come up. It'd
Yeah.
be good if people, you know what I mean? So I just kind of just be adding and adding after work finishes. Now, if I haven't gone to gym in the morning after work finishes, I'll usually go after work. But if
Okay.
not, then it could be anything from playing FIFA. Atto knows me well, so I could be playing FIFA.
Yeah, this guy
I
loves
could,
FIFA, man.
yeah, like I'm a football man, so I could be playing FIFA. I could be making more content. I could literally just be planning the stuff for the future. Like it could literally be anything. Spend time with family, friends. So yeah.
Okay, okay,
And
okay.
we
That's
won't
a,
we won't
you know
talk
what? To
about
be
how
fair,
the
that's a
weekends are though, because the weekends are different. We won't
yeah,
talk
yeah. Is
about the
that a
week.
different kettle of fish? Yeah.
Different kind of fish, bro. I saw those already.
Yeah, bro, man, yeah, bro, yeah. We'll reveal that now. Maybe in the future you can reveal that, reveal the more
Yeah,
personal side
maybe
to the
one day
weekends.
when they're paying us.
Oh my gosh, man. That is definitely jokes. No, thanks for that insight. So I'm just wondering, like, at what point, like, how did you actually get into mortgages? Because now you're not doing that anymore. But how did you actually
Yeah.
get yourself into the
Yeah,
industry?
of course. Yes, it's a very good question actually. So I actually worked, like I briefly touched on, I worked
Mm,
in retail banking, retail and business banking for about 3.5 years. So I worked for Metro Bank. And
mm-hmm.
while I was there, I was actually still studying my degree at uni while I was at Metro Bank. And I was
Okay.
coming towards my end of my degree, sorry, and I just thought to myself, you know what, I've been here for the best part of 3 to 3.5 years. Um,
Mm,
what do I want to do? And I did
mm-hmm.
speak to my employer at the time, Metro Bank, about the next roles up and roles in head office, but there
Mm-hmm.
wasn't really anything that was appealing to me. So I remember I had a colleague of mine, we were in the same team, and she just finished her CMAP exam. So just
Okay.
not to use jargon, the CMAP exams are the exams that you do if you want to be qualified to give mortgage advice. Yeah.
Okay.
So she kind of told me, look, like I've just done these exams. I really like the idea of the career path. Maybe you should try it. I think you'd be really good at it. So I just thought,
Mm-hmm.
you know what, fine. Let me just try and apply for some jobs. And I ended up getting a role with an organization who were willing to take me on as a trainee. So when I got this role, I
Okay.
wasn't yet qualified. And this is something that I do highlight to people who do want to go into the mortgage industry, because you don't actually
Mm-hmm.
always need to be qualified to get a role as a mortgage advisor. There are companies
Okay.
out there who may even fund the exams for you. They'll even fund it and give you the training that you need to
Okay.
get you up to scratch as to where you need to be. So then once I joined them, did my CMAT qualifications, and
Mm-hmm.
it was going from there.
Okay. Wow. That's that's
Yeah,
that's really interesting. I didn't know that you could be a mortgage advisor without having the qualifications. That's kind
just
of interesting, actually.
just to chime in on that. So you
Yeah.
can't actually give advice, but what a
Okay.
lot of companies will do is they would still hire you, but they'll
Mm-hmm.
hire you as like a trainee mortgage advisor. So during
Okay.
my trainee mortgage advisor time, I would just
Mm-hmm.
shadow another advisor. I might assist in
Okay.
different areas, and as you can imagine, because fair enough, the CMAP is the qualification, but there's a
Mm-hmm.
lot of things that you won't learn until you've seen the job done in real time. So a
Okay.
lot of the things that you would see when you're shadowing this advisor before you're allowed to give
Mm-hmm.
advice yourself because you're not qualified, when you read the book, you'll be able to kind of join things together and say, oh, okay, I read this in the book. that must be what so and so was doing when they were with the client. So
Okay.
that's how that kind of works. So they'll hire you as a trainee. You won't be able to give mortgage advice, like, because mortgage advice is a regulated activity through the FCA, so you can't give mortgage advice without being
Yeah,
qualified.
yeah.
But you can
Okay.
still successfully obtain roles with the scope to then do the qualifications and be qualified.
Okay. That makes
Yeah,
a lot of sense actually.
yeah,
So it's like getting that training whilst you're obviously studying for your exams, and that's
yeah.
actually the best of both worlds because you've got a job,
Yes,
and then you're getting the on learning experience as well that you can add
exactly.
with that education. That's quite sick. Just to take it back a little bit. Can you like summarize quickly for those that don't know what a mortgage is? Because it's not even something that I learned. I didn't learn it at school or anything like that. I think it was just that one of them terms that just came around like, okay, you need a mortgage for a house. But can
Yeah,
you know, explain what that actually
yeah,
is to the
yeah,
listeners?
definitely, definitely. So, in layman's terms, a mortgage is debt. It's a debt that you borrow from a bank or a financial
Hmm.
organization that is secured against a property. So it's used for the purchase
Hmm.
of a property. So, random example, you have a property that you found. The property cost £100,000. Not in London, but the property costs
Never.
£100,000, and you have £30,000. But you need to
Mhm.
make up that difference in between the 30 and the 100. So the
Okay.
70,000 gap, you go to the bank and say, look, I have a deposit. This is the property. Can you lend me money to buy this house? They would say yes, provided that you meet all the criteria, and that is a mortgage. That loan the bank gives you to buy the property is what a mortgage is.
Okay, cool. Now that's
Yeah,
a great explanation because all these terms, you know what, yeah? Let me be real. They just confuse people. It's like all these jargon that's not needed. Why don't you just say it's just a massive loan? Do you know what I mean?
this
Like
is
why don't
it.
the
Yeah.
bank say that? They just make these new terms. Oh, credit
Mm.
card, oh, mortgage, oh, car
Yeah.
loan, all of this stuff. And then people are bamboozled.
Yeah.
They don't even understand like what is going on. And it's
Yeah.
like it gets really like complicated.
Especially with FCA regulation and the FCA handbook, which you'd be familiar with as well. Everything kind of has its own section. So I feel as if that's why they might need to have a word for everything, because
Hmm.
if everything was just a loan,
Hmm.
then it's just a loan and it's just cash. But you need to remember, with
Yeah.
something like a mortgage, you're
Hmm.
yes, you're taking out a mortgage loan, but
Hmm.
at the end of that term, you're gonna own something.
Yeah.
Whereas
Yep.
if you
Yep.
take a loan cash from your bank, 5 grand loan, let's
Hmm.
say, you're literally taking money and giving it back at an interest rate. So I guess that's probably why they have different terminologies. Of course, with cars as
Okay.
well, you have HP, PCP, all these words that you hear, but the terminology and the definition that you have is dependent on what the idea or what the agreement is that you're making with that car lender. So that probably is why, from a regulatory perspective, why they probably call it something different. Anyway,
Okay. No, that you know
yeah,
what? That's a great way to think of it. You get an asset at the
yeah,
end of it for a
this is
mortgage.
it.
Everything else, not really. Yeah. No.
This
I
is
like
it exactly.
I like that explanation. So going like a bit deeper into mortgages because obviously we're trying to get the listeners to understand like what it takes, what they need to know, to get their first house, or even if they want to like look into property investing. Obviously, the first episode we spoke to Warren about property investing. So why do you think someone should get a mortgage, and what are the benefits really of getting a mortgage?
Okay, so I guess immediately the main benefit of getting a mortgage is you're able to buy something that you don't actually have the cash for. So
Hmm.
if someone just hears that statement, that's going to sound like, why are you buying it then? But
Yeah.
it's more so because we know that a property over the years, I think I read something
Hmm.
today that said properties haven't stopped increasing in the last 17 years, is what I
Wow.
read in an article yesterday or today. So you're
Wow.
taking out a loan to buy something that is appreciating, something that will, hopefully, if you invest in the right area and you don't do anything silly, will make you money down the line. So I guess that is the biggest advantage of a mortgage, especially with where house prices are now. For someone to be able to buy a property cash, even if it's in an area like, I don't know, Birmingham or Manchester, where you're looking at 100, 200k, that is still 100, 200,000 pounds.
Yeah.
You know what I mean?
True
Regardless
that.
of the
True
fact that it's half the price of what it is in London, it's still a lot of money for someone to cough up fully. So I guess it probably comes more down to what people have access to. But I thought that mortgages are a really good idea. They give you the ability to leverage a loan from another organization to buy something that's going to appreciate, which could then make you money down the line once you either sell it or decide to let it out. So yeah, I think mortgages. I think that's the main advantage of a mortgage form, and I think mortgages are a good idea.
Okay. Yeah, no, I completely agree with everything you're saying, man. Especially like the way you have to think of it is, what's the difference between your property appreciating and the mortgage, right? That's how you kind of have to see it. And basically you're gonna take the difference between the two. You have to think of it like that. And when you think of it like that, it's about making money, really. You're gonna hopefully, make money over the long term, because as you know, Clarence said, it's more than likely property's got to go up, man. Everybody needs a house.
Yeah.
There's never going to be a time where people are not going to need a property.
And
Population's
it's that
only
statement.
bigger,
It's that statement you just made, that everybody always needs a house. Because one question that I'm tired of answering is it a good time to buy? People always ask me that question. You know, bro, I'm telling you, yeah. I remember it was 2000 and I hope my boy Victor, I'm going to send this to Victor so he can listen to it, he'll remember this. My boy Victor spoke to me in 2018. As he just called me, we're just on the phone, he said to me, CK, like, it's going mad. You need to buy in Barking. I'm like, Barking? And bear in mind, I'm from West London. So I'm like, Barking? First, I'm thinking, where's that?
It's on the other end for you, bro.
He was like, he was like, Barking and Dartford. I was like, Barking, Dartford? Well, where's that? I remember he showed me the prices. And I remember seeing 2-bed flats. And they were going for about 210, some 200, 190. A guy. I then fed that back to my friend and said, listen, I don't know why, but Victor said, go and buy in Barking and go and buy in Dartford. I said, cool. But it might not be a good time to buy. I think property prices are going to go down. This, that. 2 weeks ago, me and the same friend sat down. We looked at Barking. If he had bought in Barking when Victor told him to buy, he'll be about 40 to 50 grand up on the specification of property he was looking at.
In 3 years, wow.
This is it. That's and mad. This is the thing that I always say. I would say to people, I don't think there's such thing as a right time to buy. Of course, if all property prices went to 50k tomorrow morning, that's the right time to buy.
Exactly.
But that's a very extreme example. But in the current market that we're in, if you have the means to buy a property, if your life circumstances encourage the fact that you need somewhere to live, i.e., you just got married, i.e., your parents are downsizing and you need to find your own place, and you're in, you're in a position to buy. Those are the sort of things that determine whether it's a good time to buy or not. I always encourage people to buy according to their life circumstances and not according to all the speculation that you read on Google. Because what you don't want to do is, like my friend I just told you about, is miss out on a very simple opportunity to own a property that's going to appreciate, all because of a fear of, is it the right time to buy? So that's the one question. And I'm just putting it out there. If anyone else DMs me that question, I'm not responding. I'm just going to say it now.
You heard it here first. If CK gets out in the DMs, just expect airtime. You're not going to get that.
leave it on red. Leave it on red now, just.
Oh my gosh. Yeah. You know what? Yeah. I don't know why people think they can predict what's going to happen in the future. It's just not on. You can't predict the future. And why do you think that you can? You know what I'm saying? That's just crazy to me. Yeah, you can try to, but you're trying to predict what billions of people are thinking and are going to do at a certain point in time. Are you being serious? Are you being serious? Of course, there are certain people in the world that maybe be able to do that, but they're specialists, right? This is something they do day in, day out. And most of the times they're lucky anyway. as well. So there's an element of luck that you got to think about. So yeah, bro, I
Yeah,
completely agree with you,
I'm
man, on
telling
that.
you, man, it's
It's
crazy.
just funny to me because you just never know. You know, okay, if you lose out and the property value goes down, okay, yeah, that's not the greatest, yeah. But then maybe it's an opportunity for you to buy more if you got money, right? So
Yeah,
that's the way I see it. In terms of like first time buyers, there's a few
yeah.
different types of mortgages out there. First time buyers, tackling that first. What type of mortgages are there out there, and what are the differences?
Yeah, so in terms of mortgage types,
Yeah, mortgage
yeah,
types. Yeah, for first
cool.
time buyers. Yeah.
Yeah, so mortgage types. So of course you have your residentials. You have your
Mhm.
sorry, let me define. So residential would be a mortgage that you're getting on a property that you plan to live in. So if you're saying,
Mhm.
cool, I'm gonna buy that house, I wanna live there, that's gonna be my home for me and my family or just myself, that's when
Mhm.
you would apply for a residential mortgage. So
Yeah.
anyone listening, when you hear about 95% mortgages and all this sort of stuff,
Mhm.
government schemes, all of these schemes, shared ownership, help to buy 95% mortgages, these are all things that come under the scope of residential mortgages. So
Okay.
those who were thinking that, oh, let me just get a shared ownership and rent it out, can't do that because I'm telling you, bro, I've heard it all. Like, because and you know what,
Huh. I know
I
some.
see why
Huh.
people.
I'm not saying
I've
I know
heard.
anybody that does this, but
Hmm.
people want to take that risk, right?
Ato's friend, if you're listening, Ato's friend, just know.
Gosh.
I'm telling you,
Oh
because
man. Oh
yeah,
man.
so
People are gonna be
that's
getting caught in
residential.
it with that.
Ah,
It's
bro,
mad.
it's not even worth it. But
Mm-mm.
that's residential. Then of course you have the buy to let, the popular buy to let.
Mhm.
The second most popular question on my Instagram is probably, oh, I want to buy a property and rent it out. What do I need to do?
Mhm.
And is that possible? Yes. Is it is it popular? No, because not everyone meets the
Mhm.
criteria. So I
Yeah.
did a post recently about first time buyer buy to lets, and I was explaining to people that
Mhm.
even for a even for a buy to let landlord who is
Mhm.
already an owner occupier, and in mortgage terms,
Mhm.
an owner occupier is someone who already owns and lives in the property that they own,
Okay.
they still have to put down 25% deposit. In some circumstances, there are some lenders that do
Mhm.
allow 15%, but even those lenders, I don't even think they're doing it anymore because even when they were doing it, the rate is so unattractive that you would probably rather not do it anyway, if I'm being completely honest with you. So that's the sort of deposit size you're looking at. When it comes to first time buyer buy to lets, you're usually
Mhm.
looking at deposits of maybe, well, initially they used to be about 30. What I'm being
Mhm.
told is that they're 25 to 35% deposit is what you're looking at. And on top of that,
Did you say
you
25 to 35 for first time buyers?
25 to 35 for first time buyer buy to let, yeah.
What?
That's
Okay,
if
buy to
you've
let, buy
never,
to let.
yeah,
Okay,
first time
okay,
buyer to let.
okay,
So that's if you're a first
okay.
time buyer and you've
Yeah.
never ever owned a property. This buy
Okay.
to let is your first. And if I'm being
Okay.
brutally honest with you, the way that they would look at criteria for someone who owns a property already and someone who
Mhm.
doesn't is different. It's a lot more
Okay.
harsh for the first time the person who's never owned, because they have nothing to sort of judge your ability to pay the mortgage back based on. So they're looking
Yeah.
at you as higher risk. You're not
Okay.
just a first time buyer, you're also now a first time landlord. So there's a higher level of risk attached to your application. So when they look at your application, whereas with a normal buy to let, they'll base the application on the rental income of the property and
Mhm.
the loan amount that you're asking for, with these sort of applications, they're also looking at your income as well. So as a first time
Okay.
buyer and first time landlord, they'll be reviewing your income as well. So those are the different options that first time buyers do have. I know we touched on it very briefly, Atto, but those who are thinking, yeah, let me just do 5% deposit and I'll just rent it out. Who's gonna know?
Mhm.
Like, listen, like, take it from me. Don't. It's actually not worth it. Like, it's the repercussions are not worth the £200-300 profit you're gonna make every month from renting it out. Trust me. So
Wow. Wow.
if your plan is to rent a property out, then you do have
Mhm.
options. Either rob a bank and get that 25%, or
Isn't that worse
yeah,
though? Isn't that
like
worse than
yeah.
risking?
Well, You gotta balance it out, bro.
You gotta balance. I think
You gotta balance
the
it
robbery
out.
one is a bit mad. The robbery one's a
You
bit
trying to
mad.
get caught?
Yeah, that's a bit mad.
So like, or you can buy the property. And the thing is that don't think that if you buy a property and you live there, you're trapped. There are circumstances where a bank will be willing to give you what we call a consent to let, which means that let's say you own this property, you live there, but I don't know, you've just got a new job, which means you have to move back home or you have to move somewhere else, and it's no longer feasible or logical for you to live in that property. Based on your circumstances, some banks would be willing to change your mortgage from a residential to a buy-to-let, but that's not guaranteed. That is fully subjective, depending on the circumstances, even depending on which lender you're with. Some lenders won't even give you the chance. Some would be very flexible with it. So I guess it just depends on your circumstances in those examples as well.
Okay, wow, bro. You said a lot. There's a few things that I want to actually like dive into. Yeah. I think the first thing I want to actually know is if you're caught like with this, you know, you try to do basically it's essentially fraud. Is it fraud? Is it classified as fraud?
Mortgage fraud, yeah.
Yeah, okay, it's mortgage fraud. Okay,
for something and you've gone against the agreements of an application. So yeah, technically, yeah.
Okay. What are the repercussions of that? Just give it to me straight. I want to hear, because I've actually never heard of anybody, you know, this situation with anybody yet. So,
if I'm being very honest, I've never known someone to get caught. Now that doesn't mean go and do it.
We're not saying go and do it. That's not what we're saying. I just want to know, innit? If someone got caught, what happened?
People will hear me and they'll be like, "Oh, what? Get caught. Let me go and just do it."
This is not financial advice, people. By the way,
exactly.
Yeah.
Tell
Very
them again.
clear on that.
So, yeah, like I've never known anyone to get caught. Last time I checked, the maximum sentence for fraud-related activity in the UK is 14 years imprisonment.
Okay, that's not worth it, man.
That's not worth let's say, and this is the thing, like it just depends. This is why I always say it just depends on what you're willing to do. Because me personally, even if it means 6 months imprisonment, why? Because of £200 a month profit.
Yeah,
in my flat
it's not that much.
Nah, man.
Exactly. Nah.
There would be repercussions for it. Yeah. I wouldn't even encourage anyone to look up what would happen if I do this, because it's just not worth your time or your life. I can't even lie to you.
Okay, wow. That's you know what, that's a madness. The second thing that kind of is slightly annoying me that you said, was the 25% deposit. They don't want us to, you know, they don't want us to build that wealth, bro. Like 25% deposit.
I'm not
25.
I'm not a conspiracy theorist, but my thoughts towards that whole buy-to-let thing, I feel as if the high deposit for the buy-to-lets, along with the extra stamp duty cost that the government added for anyone who owns a property to buy a new one, were part of the government's way of giving people more of a chance. Because a lot of things in the property market happened around the same sort of few years. Around the same time, we said we were going to build 300,000 properties, and before you knew it, every corner, near every house had flats being built. The stamp duty laws were brought in. Then they have these government schemes that they extended to allow people to buy properties. So along with that, which goes a bit deeper, anyone who owns a council property, hopefully you're not going through this, but you'll find a few people who own council property are now being told that they no longer have the right, the popular right to buy. Now, councils are, like there are some boroughs in London that are no longer allowing people to do right to buy. So, I feel as if the government kind of felt as if, okay, there's a shortage of properties at the moment, which is why properties are so high, because supply and demand. If a lot of people want to buy and there's not enough, so we have to do something about it. So what we're going to do, we're going to build 300,000 properties. We're also going to make sure that all of these landlords with cash can't just buy them. So to kind of, you know, stop them a little bit or to put them off, we're going to add this stamp duty thing in, whereby if you already own properties and you buy another one, then you're going to pay an extra 3%. So there's so much that goes on in the property market.
Wow.
You know what I mean? And I guess it's only when you're in the middle of it and you kind of realize, wow, like, yeah, they want people to buy. Yes, they want there to be more properties, but I guess it goes back to the question of, do we think that they do enough to actually help people get on the ladder? You know?
Yeah,
So
yeah.
yeah,
After what you explained, it kind of does make sense. But I feel like the people it hits is the people that are trying to get onto the property ladder. People that are already like up there, okay, yeah, it's more expensive, but they might have the
yeah,
capital to do that. They might sell a property and or do what they need to do. But
exactly.
like people like me or you, that wants to build our 2-3 portfolio, it's gonna be so hard for us to do that with a 25% deposit.
It's not easy, man. It's not
Yeah,
easy at
that's
all.
mad.
Not easy.
I wanted to go back to like first time buyers. If it was residential, if you were buying your residential, I haven't really looked into this much, but I remember like you could get like a 5% deposit, and I think it was also the norm that deposits were 10%. That was kind of the norm. Like when I got mine was 10%. What's that saying? Is there still 5% mortgages out there? Is there still
Yeah,
10%? Is that gone back to normal? Is it higher than that?
yeah. So what actually happened was around, well, we're 2021. Let's say March. Let's say March to April 2020. There were actually like, this is the thing. This whole government 95% mortgage. It's not new.
Mm.
Like we
Mm-hmm.
had this before. It was just what was it called? It was called the mortgage guarantee. They even called it the same thing. So
Yeah.
this was already a thing before, where the government brought in an initiative for people to be able to buy a property with 5% deposit. Now, initially, the lenders that were getting involved with these weren't your everyday high streets. So for those who are in the mortgage industry, they'll recognize some of the lenders I say. There were lenders like Aldermore, who are like
Mm.
a bank, but not like a. I don't think they actually. I don't know if they have any high street. I know they have one like in Kingston
Mm.
or something, but they're not a popular
Mm-hmm.
bank. So initially, it was only certain banks that were giving out these mortgages. Eventually, it did become the norm, and when that
Mm-hmm.
mortgage guarantee was no longer there, it was literally just the banks had products at 95% loan to value. That was it. As soon as the first lockdown hit now, and there was all this hype about people maybe struggling to pay their mortgages, all the 95% mortgage rates and products were pulled out from the market. I'm sure some 90% ones were pulled out as well for some lenders as well. And at the time, it was kind of like a bit of a shaky time for anyone who wanted to buy, because of course we were smack bang in the middle. In fact, not even in the middle, we were at the start of a pandemic. We were in a
Yeah.
lockdown. Nobody knew what to do. People were losing their
Mm-hmm.
jobs, getting made redundant, and everything was kind of just all over the place.
Mad.
So it was only then when they announced the 95% mortgage guarantee again, that's when some banks then started saying, okay, cool. If the government are bringing this back, they must have done their due diligence and think that this is feasible to do so. Let's
Okay.
start giving out our own 95% mortgage product. That's when you'll find lenders like Nationwide, Halifax, Accord Mortgages
Okay.
started releasing all of their mortgage rates for 95% loan to value.
Okay, bro. Okay, that makes sense. So it sounds like 95% are coming back, 10% are kind of coming back. To be fair, everything's looking better. We are out of lockdown, so
Yeah,
okay, that is definitely. Listeners, don't worry. You can still get your 10%
no
deposit
stress,
saved
man. It's
up.
available.
No
But
stress, man. No
I
stress,
would
man.
say don't go crazy about it, because
Mm.
the criteria is very different for 95%
Okay.
mortgages. Um,
Okay.
it's a lot more stringent. For example,
Okay.
it's once again, it comes down to that word risk that I was talking about earlier.
Mm-hmm.
Because the bank is taking more risk by giving you more money, they're going to kind of do maybe a bit more checks when it comes to the mortgage. So
Okay.
there's some listeners might be familiar with income multiples, which is what the bank
Mm-hmm.
uses that it times your gross salary by to determine what they're
Okay.
going to lend you. Now, the income multiple for probably all the lenders that I've seen for 95% mortgages are at 4.49, which is basically 4.5. But those who know
Okay.
the market will know that there are lenders that do 4.75, 4.85. Some do 5
Okay.
times your income. So when you
Okay.
get to that point, there's certain bits of their criteria that they'll tighten up a little bit, just to make sure that they're not, aggressively lending to someone who can only just about afford it, basically.
Okay. Because I was
Yeah.
actually gonna ask you, like, in terms of how much can, you know, first time buyers get. And I know that's like dependent on it, but you answer that question. So you're saying 4.5 times your salary for 95% mortgages if you want to borrow it. Does that change for like 10% and 15%? Because I remember as well, I'm not gonna lie, I was skeptical like a few years ago. I remember because I was speaking to, before I got my mortgage advisor that helped me out for this property. I was speaking to another one before them, but I didn't want to pay them. I didn't want to pay them. I didn't have nothing. I didn't have no extra additional cash to pay. Honestly, if I had it, I would have, but I didn't. But they were like saying to me, "Yeah, man, I can get you 5 times your salary." And I think why? Not that they believed them. Maybe they could have, but it's just that like advisors I had used before. I spoke to one on the phone. He was giving me way. He was telling me he can get me way lower. I did LC mortgages. I just did bare, and I was like, bro, this one person that's telling me if I pay them £500, and it's not that they weren't a legit company. They were telling me they can get me 5 times my salary. How is that possible? How are they gonna do that? Funnily enough, my actual mortgage advisor did get me 5 times, but he got me over 4.5 times. So yeah, I think it's definitely a chance. But that 5 times, how likely is it that you can get 5 times your salary? What's the likelihood?
Yeah, listen, bro, if you meet the criteria, you can get it. So I remember when I was a mortgage advisor, I've done 5 times income with the Barclays were quite popular for it. Virgin Money were quite popular for it. You know, they would usually have a requirement, something along the lines of if the total income on the application is above 60k, then we'll do 5 times. You know,
it's not just so if you get over 60k, you can get so it's the salary. Yeah. Obviously, we know salary. Salary. So wow, I swear.
That will all depend on the lender, and you make a great point when you talk about you went to different places and they were saying they'll give you different amounts. That is exactly why I when some of the videos that I make, I say always make sure you see a whole of market broker. Mm-hmm. There are some brokers that will tell you they're whole of market, but they don't actually have access to the whole market. Which is why you might go to them, and there's some lenders that broker B said he could get you a mortgage with, but broker A isn't mentioning them. And he's not mentioning them because they're worse lenders. He might not be mentioning them because he can't do business with them. And it's nothing personal to him. It's just the network or the organization that he works under. They might not have access to that lender's panel. So it's literally just understanding the kind of broker you're using. But 5 times income, I've done it before. In fact, I've done it plenty of times.
Oh, right. I didn't know. Over 60k, right? Them high earners, you know.
Yeah.
Wow, bro. You should definitely do a post on that because I didn't know that. About the obviously there's obviously more to it, which which we'll discuss in a minute. But I had no clue. About
Can I be honest with you, Atto? The reason I don't make those sort of videos is because I'm telling you, and I've seen it with my own 2 eyes. Yeah. Mortgage criteria changes like that. I could tell you today, you can get nationwide 5 times your income, blah 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 blah. You can be getting excited and get you to sign the form. Then we'll come back tomorrow. They could have changed their criteria. The rate that I gave you could have changed. So there is an element of volatility. It's not like cryptocurrency volatility, but there's still an element of volatility when it comes to mortgages, which is why even though I make content about the criteria and what's needed, I tend to make criteria about the things that are more the things that tend to stick. Stuff like what do you need? What you need for a mortgage hasn't changed in ages, in a long time. And if it does change, I'll give you another video to make. But when it comes to actually making videos about specific lenders' criteria, it's a tricky one. And they're not paying me for it, so I'm not doing it.
No, fair enough. Maybe, that's an idea. Obviously, we can talk about that offline. But thanks for taking the time to listen to this episode. I do really appreciate your support so far. If you do want to support the production of this podcast further and you want to get early access to the next episode of the Takeoff podcast, or you want to join in a monthly live Q&A, make sure to check out the link in my description. Either pledge to my Patreon or subscribe to my YouTube membership. Either way, I do appreciate you supporting me and helping me to build the best business and finance community in the world. I do hope that you enjoyed the rest of this episode. What would you say someone needs to give them the highest chance of success to get their mortgage application, approved?
There's a few components. So there's your income. The higher your income, the more you're going to be able to lend. It's literally as simple as that. A big thing, of course, that we're all aware of or should be aware of is your credit score. It makes a massive difference. I have a friend who was literally just bought his first property. Didn't know that he had a CCJ from a parking ticket in 2019. He was just very lucky that the lender were willing to overlook it. Because
I was actually about to say that. How did he get that through? That's actually kind of mad.
He was very, very lucky. He happens to be quite a high-profile individual in the media.
Okay.
So I think that's how he managed to get past it. But I'm telling you, your credit score will absolutely ruin your whole mortgage application if it isn't sorted out. I always like to encourage people to, even if you don't think you have any issues with your credit, you should be checking it anyway. You should always know what your score is. You should know what's on your credit report. You should never not know. You know what I mean? Because
that's
you not
mad
knowing,
to me.
you not knowing leaves you open to all sorts. I've had people in the past say, "Oh, my credit's really low. I don't know why. Can you have a look?" And then I'm starting to see phone contracts that someone else has taken out on their name, and I'm like, "But that says 2018. Like, have you never seen that before?" Like, no, I don't really check it. Well, you don't really check it. It's now just got you a default. So it's just crazy. You need to check it, man.
Yeah, that's mad. And we're gonna do therefore another episode on credit scores because it's really important actually in everything. I mean, even businesses have got credit scores. That's how important it is. Like it's literally like this one number, can make or break your life. Do you know what I'm saying? Like if you got bad credit, you ain't ever gonna get a mortgage. Like CK saying, man. That is you know how sad that is. That this one score, and you can't change and become another person and try fake being somebody else. It ain't gonna work. It's not gonna happen. It's like it's tied to your identity. So yeah, man, that's mad. Okay, so you said your salary, you said your credit score. Is there anything else that you need to have in place to make sure that mortgage application is smooth and it's going through?
Yeah, of course. Even when I say salary, a lot of it ties into your day-to-day as well. So it's just ensuring that stuff like your pay slips are all in check. The bank will ask for your bank statements. Most lenders will ask for 3 months bank statements for all accounts that you own. So they will want to see that as well, and they will expect to see activity on those accounts, and they will. I'm not going to lie to you. They will judge the activity accordingly. If they see that you're, doing regular accumulators on Sky Bet and you're even losing every week because I know if you're an Arsenal fan, you're just losing every week. And then because of that, they could say, all right, then, you expect to be able to pay this mortgage amount, but you're using this much on Sky Bet every month. Now, what I will say is that when we look at a lot of these calculators as advisors, we do look at what projected income and projected outgoings are going to be. So it's not always just about, what you had in the past, but there are certain things that the lender will question. So it's just ensuring that, if you know that every single month you go into your overdraft or you go over your overdraft, expect that to be something that the bank's going to pick up and possibly decline your mortgage for. So even though we do talk about, credit and this and that, there are finer details in the actual application process that's looked at, because it's all good me telling people what applications or what documents to have for the application. But if the documents that you have aren't up to scratch or they're not going to be verifiable by the lender, you still won't stand a chance,
Yeah. You know what? Yeah, it's very interesting that you said Sky Bet on Arsenal. That's not a good bet, man. Right now, man, I'm an Arsenal supporter. I don't even watch that like that. Boy. That's a terrible bet. But you know what is interesting? It's like somebody having like all these bad financial habits. It's basically like karma, right? You put out all this bad karma. You're not even doing well with your money management. It doesn't matter how much you're getting. It's bad with your money, yeah. And you're like, okay, I'm gonna go and get a mortgage. And then you try to be good for that little period, expecting to go through when you weren't, good before. I really believe if you put in good energy out, you're gonna get good energy back. If you put bad energy, you're gonna get bad energy. And it's about consistency, innit? If you're not consistent, right? When it's time to look at your documents and everybody wants to and look at your life, you're like, okay,
it's long.
This is not good. Yeah, it's long. It's long. It gets you to rethink. So it's very, very important, when we're talking about all this financial literacy, building wealth and, saving and doing all this stuff, it's for good reason at the end of the day, because it's not us that's going to come and check you. When you are ready to do what you need to do, it's the bank that's going to come and check you. So yeah, man, that is a very, really interesting perspective. Are there any hacks that you think that a first-time buyer can use to get onto the property ladder quicker that you know of?
Yeah, you know what? Hacks? Apart from the things that I've mentioned, the only thing that I feel like, if there's anything that I feel like is really good that enough people, in my opinion, don't use is a lifetime ISA. I feel like I think it's amazing. I have one, so I know you can probably tell by my biased approach. But it's like you pay $4,000 in every tax year, you get £1,000 on top. Now I can't think of, unless you have other avenues in which you can make that money, I can't think of ever seeing a bank account that gave you that sort of return from all my years in banking, even when interest rates were better, to receive £1,000 off of 4K, and that's every year. That's not just once. So put it like this: somebody could save, I don't know, somebody could save 12 grand in 3 years, and that 12 is now 15. You know what I mean? So when you really look at it like that, it just allows you to leverage. So I would say, in terms of first-time buyers, I know a struggle for everyone is saving for your deposit and maybe, putting money aside and even having the discipline. Lifetime ISA, perfect for discipline, because one, you can only use the money, I think it's for retirement, if you are buying a property and something else. I think bankruptcy, if you go bankrupt, you have financial difficulties. And if you do take the money out, you can, but you lose 25% of whatever you put in. So in a way, for me, someone like me who wouldn't want to lose what I've made, that would be motivation to be like, maybe I don't need that money so much anymore. Let me just leave it there. So that's definitely a hack that I would say. Another hack is, this hack is quite different. It's not very much financial. It's more social. It's don't rush, because there are situations where I've known people to rush into buying when they could have easily just waited. I don't know, they were maybe about to get married. They could have bought with their partner and even bought a bigger place together. But we have this whole social thing of, oh no, I must buy myself now. Like, always stay within your means. 100%. If you can buy a loan and be comfortable with it. But if you are in a situation where you buying a loan means that you're going to be eating Weetabix for dinner for the first 3 months, then my guy, just stay in your mom's house, because
my gosh, that is mad.
I'm telling you, bro, because like, I know there's a lot of societal pressure that kind of pushes people towards.
I don't understand it, man.
Yeah, like, I feel like we've had this conversation quite a bit after, where we're just like, everyone's just stay in your lane, like, your time is coming, just chill, relax. So
it's not that deep.
That's another thing I would say. A hack is definitely recognizing what your goals are and recognizing that your first purchase might not just be by yourself. Your first purchase might be with a sibling, a partner, whoever, and it might be, or it might give you the ability to buy something that's a lot better than what you were able to buy by yourself. So
yeah, bro. I love those tips, man, and those are tips that I definitely resonate with. I used Lifetime ISA when I bought my property, and like you were saying, you know what's the funniest thing about it? I only found out about it because I actually went searching for it. I was like, okay, where can I put my money, and what's good out there, and I happened to find it. I had never heard about it on the radio. Help to Buy ISA, funny enough, I heard about it on the radio everywhere. Lifetime ISA, for some reason, does not get advertised at
It really
all.
doesn't.
And it's like,
really
it's
doesn't.
crazy. It's like free money, bro. You know what I mean? It's like they don't want you to get the free money. They'd rather you not take it, to be honest. They don't want to give it to you.
They're like,
Let's
you're
be
not
real.
serious.
Yeah, they don't want to give it to you. They don't want, why would they want to give you free money? Let's be real. Yes, they can offer in it, but they don't want to give it to you. There's the difference between that. But yeah, no, I completely agree about setting your own goals and staying in your own lane, man. That's definitely a conversation that we've had a lot of, man. And yeah, I completely agree. It's just not really necessary to rush if you're not ready for it. So I haven't sold my house yet, so I don't even really actually know what will happen. But what happens if you have a mortgage and then you sell your property?
Yeah, cool. So what happens is when you sell, okay, let's say, example, once again, property is worth 100k. I'm just using simple numbers for the people then. So property is worth 100k. Let's say that you still owe the bank, let's say you still owe the bank 50k. And you sell your property for 100,000. What will happen is the bank will literally like wipe the debt and you just keep the money and you're good, basically.
Okay.
No, I'm
wow.
gassing,
wow.
bro. I'm gassing. I wish. So, okay, cool. I'm gonna use a few jargons here now. So, so some people, for those listening, you might hear people talk about equity. Equity is the difference between what you still owe the bank and what the property is worth, or what it sells for. Yeah. So in this scenario, you owe the bank 50k. Yeah. The property is worth 100k. So your equity is 50k, which is the difference between the 50 and the 100. Yeah. So let's say for example, let's just use an ideal situation. You sell your property using an estate agent. The estate agent might say, yeah, we're going to sell your property for you. We're going to charge you 1% or whatever they charge these days for your property sale. What will happen is when you sell your property, you'd have a few costs. So you'd have a cost to the estate agent. That estate agent will take that fee from you on point of sale. You'd also have to, of course, pay the mortgage back because that's still a debt that was secured on the property. I'm saying was because you've now sold it, but your name is attached to that debt, so you have to redeem it and pay it off. Once you receive the money, and I keep saying you, but all of this will be done by your solicitor. So it's not as if you're just the money's gonna land in your account and then it's what should I do with it? Like,
that's
if not,
a lot of money to hand in your account, man.
Do like,
people splash
I'll
that
pay
go on
you
holiday.
later. Like, I'm good. You know what I mean? Go on holiday to Niger, not come back. So now,
oh my gosh.
So they would then you have what you call charges on the property, and in some situations you might have two charges, but the first charge on the property is always the mortgage. That's known as the first charge. What they would do is when that money comes in from the proceeds of the sale of the property, that would then, the first 50k goes to the bank. That settles your mortgage, and that means, your mortgage is now paid off. And literally, after any fees, anything, the deductions that need to be made, you might have to pay your solicitor. After that, then you literally just receive the balance, and that's what will happen.
Okay. Wow. That's a complicated process, man.
And that's why you have a solicitor. That's why you have a solicitor.
Gosh. Oh my gosh. That is a complicated and long process to get money that belongs to you. No, I'm joking.
No,
of course it belongs to you, but you got to pay people.
I even tried to simplify it. There's so much more to it. So much more to it. There's loads.
Oh my gosh. I can imagine, man. Wow. No, thanks for providing that insight. So, mortgage isn't for everybody. So what would you say are some of the cons of getting a mortgage?
Cons? You know what? I wouldn't say there's any cons per se of getting a mortgage. What I would say, though, is that there are people who I don't think should get mortgages.
Okay.
And what I would say is, if somebody is, like we mentioned when we were talking about the 95%, I think I've made a few videos on this. If you're literally scraping to get this mortgage, like, I use the word scraping because it's like, if you're literally saying, nah, I must buy this house by fire, by force, and yeah, I know it's 95% mortgage, but I'll make it work. I don't need to eat. I won't eat no food. Like, I'm telling them, those are the people that I say shouldn't get mortgages. You understand?
Oh my
Like,
god.
because this is the thing. It's like, it might sound good to get the mortgage at the time, but please, when you are paying this money back and you've done an eightfold accumulator thinking you're going to make 2 bags on Sky Bet and you've lost all your money, even the Weetabix you thought you were going to eat, the Weetabix is finished. You can't even eat Weetabix again. So it's like, that's the only time I would say don't get a mortgage. Only if somebody isn't in a position where they can comfortably, and I use the word comfortably, because comfort is not going to chicken shop and saying, "Bottom, I'll pay you next week." That's not comfort.
Exactly.
You know, that's struggle. You know what I mean? Like, when this ain't struggle season.
Oh my gosh.
You struggled enough. So it's like,
oh my god. Yeah, bro, you know what? I'm just imagining somebody just like literally counting pennies to get a mortgage.
Bro,
you know?
People are doing this thing, bro. And it's mad because I've even aside from like that, I've even had people who have opted for shared ownership. And they've just gone down the shared ownership route because it's easier. Yeah. And they have the property, and they're like, "Oh, bro, man, I wish I never did this shared ownership. Like, it's a waste. Like, I'm not paying a mortgage. I'm paying rent." And I'm thinking, but these are all the things that you should have thought about beforehand. So when we talk about not jumping into these agreements, these are the sort of decisions you're making. And end of the day, bro, this is a house or a flat that you're buying. Like, this isn't like where you go and get a car finance and you have a 14-day calling off period, and if you don't like the car, you bring it. Nah, like, this isn't that, you know. So if you're really gonna go through that process of buying the property, spending the money for the legal fees, paying your broker, doing all this stuff, and buying furniture for the house, you need to really be sure that you are ready for it financially. The way I look at it is that I think, okay, what are my outgoings now? What are my possible outgoings going to be when I move into the property? Let's talk about bills and stuff like that. And then, what is my mortgage going to be? And that number together, if I cannot afford that on my current income, I need to wait. And in that situation, and I say this because this is something I've actually had to do. So I realized, okay, cool. In my normal outgoings, there's a few things that need to go. There's a few things that I have that I'm spending money on that had to go. So I had to flush all of that out first before I could even have the clear mind to think, okay, let me start looking at properties, you know, because some people say, oh yeah, just get your first property under your belt and everything will sort itself out. But it's a risk to take. It's a big risk to take, you know.
That's man. You know what? Yeah, you said you dropped so many gems there because like it's so true. Like especially the shared ownership one. We're definitely gonna have to just dedicate an episode to that because for me personally, I remember looking at shared ownership and I did the calculation myself and I was like, this is not worth it. This is a scam. This is like an actual legit scam. Like they making people think, oh yeah, okay, you're going to the property ladder, but these times you're paying more. You're not even getting that much equity, and you're kind of you're overpaying for like these new builds, and then you're paying more than you would have paid if you just rented anyway. Like it's just it doesn't make no sense. Honestly, when I did the calculation, I was like, right, like I'm paying pretty much the same as if I just bought a property somewhere else outright. I was like, I'm not doing that. I'm not doing that. Literally. That is mad. So I feel shout out to all the people that got shared ownership. You know, we're not dissing you. But yeah, you know, shout out to you. Obviously,
I guess this is something I always say. Yeah, I guess this is why I always say that, like, because once again, another question I get asked, oh, what's better? Should I go for shared ownership or help to buy? And to be honest, it depends on your circumstances. What is good for someone else might not be good for the next person. And that's why if you speak to most mortgage brokers and you say to them, oh, what's the likelihood of this? Have you had this situation before? They'll always give you the same answer. They'll say every case is is individual. Everything's on a case by case basis, because there might be some cases where a mortgage advisor might recommend shared ownership to a client, but there'll be some cases where they might recommend the client waits or does help to buy. So it all just depends on that. So even anyone who does have shared ownership, it's not to say that you've made the wrong decision. Hopefully, when you made that decision, it's what was right for you. But that's more that statement is more for the people who are just trying to just jump into something, no matter what it is. They just want to have a key in their hand, and that's not the best. That's not the best way to go by. They want to do the God's plan pose, that one on IG. The God's plan with their phone like this. God's plan.
Oh my God, man! I'm tired of them posts, man. I'm tired of them posts, bro. I did not post one thing about. I don't even think I posted anything about my house.
Yeah,
I don't think I did. I just appeared here. Yeah, I just appeared here.
You know what I'm saying?
I just appeared here.
I told lives in a mansion. He doesn't. I know. I'm not allowed to say that. I told lives in a 8 9 house.
Mansion,
I thought it's dangerous.
Oh my God, no! I actually don't live in a mansion. I don't even. Would I get a mansion in the future? I might get a mansion. If I got bare kids, I probably would. You know what? Yeah. So another thing I was thinking. Obviously, I've never missed any payments, right? But what would happen if I missed a few payments? Like, walk me through that process. What would the bank do to me? Would they try and take my house? At what point would they try and take my house? If I miss payments.
Do you mean if you miss payments for your mortgage?
Yeah, miss payments.
Yeah, so cool. So if you look at most mortgage illustrations or marketing material, you'll always see this thing at the bottom and say, if you do not keep up with your mortgage repayments, your home may be repossessed. Now, how it's literally always there. How every lender treats that individually, because of course you would have lenders that will have sort of arrears departments. Departments that will call you. The rule of thumb historically has been 3. That once you miss 3 payments, or in a row that is, so let's say you're in 3 months worth of arrears, and the bank can, of course, repossess your house. So I've never actually worked in arrears or debt collection or anything like that. So I'm not entirely sure, but I do know that every lender would have their own threshold as to how they will decide how they're going to treat your missed payments, and also your reason. Of course, look at last year now. We had a pandemic, loads of people out of work, so it was common knowledge that people were struggling to make their mortgage payments. So of course, there were deferred periods for mortgage payments and stuff like that that people were able to take advantage of. So I guess it all just depends on the situation.
Okay. Now, bruv, that was a great answer. It's interesting to get insight, because it's not even something that I've thought about, because obviously I'm not going to miss any payments. But even from like a business point of view, if you own properties, you own an office, like what that process must be like, it must be hella stressful. Thanks so much, man, for the gems. For the last hour, you've just been dropping gems upon gems. So what's the plan next for CK Talks Money? What have you got in the pipeline?
Yeah, so we've got a few collabs coming up. You might see your favorite host Atto J on one of those collabs. You get me?
Okay.
So there's a few things we're working on. It's just to keep growing, bro. Just to keep working, people keep growing, keep trying to motivate and inspire. Really, like I do a lot of the stuff I put out. It's free. I don't charge or get paid to put out most of the stuff.
That's the thing, bro.
This is it. Obviously, you've been doing it longer than me, so you understand what I'm talking about.
Yeah.
So it's just a matter of allowing people to have the information they need, and there are a few things that we're working on, but you will literally find out in due course. But if you're listening and you don't follow me already, CK Talks Money on Instagram, just Instagram, because everything else I don't use. So just follow me on Instagram.
What about your Twitter? No, you use your Twitter sometimes.
You know what, bro? I have to be honest. The only reason I post on Twitter is so I can screenshot it and post it on my Instagram. to help my aesthetics on my page to make it look neat.
Ah.
That's the only. That's why I have Twitter. I'm being completely honest.
Oh
So,
god, yeah. Twitter is another beast. Each social media is its own beast.
Oh,
Yeah,
for real.
that it's just a
For
bit
real.
of a madness. What about TikTok? Are you on there?
I am. You know what? And I should be working on my TikTok. Follow me on TikTok as well. So you can talk money on TikTok.
Okay,
Yeah, I am on
okay,
TikTok.
great. Yeah, because you do reels in it, so it makes sense that you'd be on TikTok as well. Okay, you heard it from CK himself. Definitely go and follow him on all his platforms. Obviously, watch out for the content for him. He's gonna be we're gonna talk about credit scores in the future. We're gonna talk about shared ownership. We're gonna probably talk about Help to Buy. There's a lot to talk about in that perspective. I definitely appreciate you, bro. Appreciate your
Thanks
content.
for having me, man.
You know, that's how we connected anyway, man. On that level as well. And yeah, man, blessing up the podcast. Have you got any final words before
Bro,
we end
just
this episode?
keep doing what you're doing and well done for everything you're doing, man. But listen, for those listening, I know I'm the guest today, but the way I even know Atto, and Atto is no longer a social media friend, like that's my bro. So the way I even know Atto is because one of my friends, I wanted to learn more about investing. He said to me, follow these 2 pages. One of them was Savvy Wallet. And I reached out to Atto, and it's just been great ever since. So well done for everything you're doing, bro. You're doing amazing.
Thanks, bro,
yes,
man.
Brother.
Same to you, man. Thank you for the love. Defo the same to you, man. Thanks, everybody, for listening, and we'll catch you on the next episode.
Love.